the welcoming. It's fantastic to be here with you virtually today. And yeah, I mean, so very interesting time to be an economist. There's really a lot going on. Construction sector, unfortunately, just seems to be getting the short end of the stick. If we look at a lot of the figures that keep coming out, one of the worst performing sectors over the last few years, and COVID-19 has very much exacerbated that to a large degree. There's a lot going on. So I've only got 20 minutes, normally a little bit shorter than what I normally do. So I'm going to try and give everyone as much info and sort of touch on what I think are the key things going forward in terms of the outlook for the construction industry and the consulting engineering industry. So just briefly, brief agenda. Chat a little bit about the economy. Of course, we have to. At the end of the day, it's the overall driver of what's happening in the industry. We're going to look at some of the key risks and chat briefly about, in my opinion, the fiscal situation in South Africa is really worrying. We've had 10 years of the government spending more than they've been earning, and on top of a bunch of other things, it's a very worrying situation, in my opinion. A lot of economists are starting to sound the alarm bells on the fiscal situation, and sustainability thereof. We'll look broadly at the construction industry, some initial data on COVID-19's impact on the construction sector. And then, of course, we're going to talk about these 50 gazetted projects. And I mean, it is definitely positive that it does seem to be that the signature plan around the government's stimulus measures is going to be around investing in infrastructure. So that is the least positive. We've had all these sustainable infrastructure development conference. We've had infrastructure elements being merged into the Department of Public Works. So there are many steps in the right direction, which I think are positive. But in my opinion, there are a lot of issues around implementation, around a lot of other things which we can chat about. And then we can briefly look at the civil construction outlook versus the building outlook. So civil construction is looking a lot better in the short run, at least, because government does have the ability to play that counter-cyclical role in sort of bailing out the industry to some degree from the impact of the lockdown and the pandemic. Building, on the other hand, is looking a lot more negative because that's very much private sector driven. And obviously the pandemic and the subsequent lockdown has had a really big shock on demand to the private sector. And South Africans on average are expected to get considerably poorer this year. A lot of people have lost their jobs. A lot of people are getting relatively big pay cuts. And that is going to filter through to very much a lack of demand for housing, for example, on the private side, shopping centers, your commercial spaces, office blocks, those sort of things. So very different dynamics there. And of course, these recently gazetted project, anything from the public sector really is very much in the civil space. Your roads, your water, your power. Affordable housing may be something on the building side that could be a little bit more positive, but we're going to have to wait and see. Okay, so just very briefly, I want to touch more on the construction industry. So obviously, you've probably heard this 100 times already. It's unprecedented collapse in economic activity from the pandemic. Never before have we all just gone home, stopped working. Economic activity just completely collapsed. According to the IMF's projections, the global economy is expected to contract by 3% this year, which will be the worst since the Great Depression. So it's the biggest economic fallout, in almost 100 years. So really unprecedented, staggering collapse in the global economy. On the local side of things, we've just got the GDP figures out the last couple of weeks. And you can see that the South African economy contracted by 17.1% in the second quarter, year on year, compared to the same quarter last year. That is, of course, the biggest contraction that we've ever seen since the inception of the data. You'll read the media headlines. It will say that the GDP was down 51% in the second quarter annualized. It's a bit of an exaggeration because that's an annualized figure. They convert a quarterly figure into a yearly figure, which isn't really fair because the lockdown isn't going to happen for the rest of the year. So it's very much exaggerated, but still down 17.1% in the second quarter year, really big decline. And the important thing to mention is that the South African economy was already in recession. We already had 3 consecutive quarters of negative GDP growth in the third, fourth, and first quarters of this year. So now on top of this, really, this COVID-19 pandemic couldn't have come at a worse time for the South African economy, which is already in a really dire state. If we just briefly break down the figures, if we look at the 51% decline, so these are definitely very much exaggerated, but if we just get a feel from the production side of the economy, where the big contractions were, you can see that the construction industry was unfortunately the worst performing sector in the second quarter. Obviously, the industry was completely shut down for 5 weeks. And according to some of our data, it took quite a long time for contractors to get back on site and for everything to get back up and running. I mean, we estimated that as much as a month after the construction industry was allowed to go back to work, so it was in level 3, I think, the industry was only at about 15% capacity after a whole month of being on level 3. Because of logistical problems getting back on site, because of a lot of the health and safety standards that now had to be adhered to, you have to submit all these plans, especially on public sector projects, and approval for those plans. So it's you can see that that's, for me, the reason why construction industry was one of the worst performing sectors. Of course, manufacturing, mining also really bad. Agriculture was the only positive. We had record harvests in some of the subsectors. And I mean, overall, I think the key thing to understand from the economic point of view is that South Africans are going to get significantly poorer this year. At minimum, it's going to be about 8% decline in per capita income, or your take home, the average take home salary. And this is the forecast going forward. You can see it was already declining from 2013. I mean, we've had the longest downward business cycle contraction in South Africa's history since the fourth quarter of 2013. It's something like 80 something months that have been cumulative, downward looking from 2013. Economy was contracting. You can see this big drop here in terms of our forecast for 2020, which are going to be around 8% down. It could be worse even. So it's going to move the South African economy onto a lower growth path, which is a bit worrying going forward, given that we're already entering a recession. Of course, okay, so I'm just going to chat about, I don't want to go too much into the economy, I want to chat more about the construction industry. So I mean, some of the key risks, in my opinion, is really the fiscal situation in the economy. And I mean, firstly, if we look, just for example, if we look at the fiscal response now to the pandemic and the lockdown, it was supposed to be around about 500 billion rand in response, 10% of GDP. People were very sort of, I wouldn't say excited about it, but people were like, okay, that's a relatively good response from a fiscal point of view, especially if we compare to other emerging markets. It's very much on the upper end of the amount of relief that would be given to the economy. But if we look at how much stimulus has been spent so far, it's only about 2% of GDP so far. If we compare to other economies, when they say they're going to spend 10% in stimulus, I mean, it's going to be around 10%. In South Africa, we have big problems with implementation. We have big problems with corruption, a lot of inefficiencies. If we just look at the recent Auditor General's report, I mean, there's been fraud, there's been corruption in the majority of the relief programs. For example, the social grants, over 30,000 payments are being investigated. The UIF payment fraud, I mean, dead people have been receiving money. People who already work for governments who are employed are receiving money. Of course, around the procurement of PPE, clear indications of fraudulent activities from the Auditor General's report, around food parcels as well. So, this is kind of I mean, this sort of ties into the whole fiscal situation and the stimulus around construction as well, in that, implementation is really a big issue. And I mean, one thing I'm very worried about going forward for the economy is the so-called fiscal cliff, in that, in my opinion, we are going to be defaulting on our debt over the next 12 to 18 months or so if government doesn't drastically cut their spending. So, and this is already going to be the case before COVID-19. COVID-19 has just accelerated that now. So, I mean, government was already in an extremely precarious position. So there are a bunch of factors, right? Some of the key factors are, firstly, is that there's going to be around a 300 billion rand shortfall in tax revenue because of South Africans getting poorer, businesses not making as much money, they're going to pay less tax. People spend less money, there's going to be less tax on that, for example. Okay, so there's going to be 300 billion rand minimum shortfall in tax revenue. We are now at junk status as well, so that means it's more expensive for the government to borrow money to finance their expenditure. It's mostly what they do is they borrow to finance the expenditure. Obviously, the COVID-19 relief spending also plays a role. That's another additional cost. The interest rates are real interest rates are higher, and what I mean by that is that the 10-year bond yields are higher, and that is effectively the rate at which government borrows money. So those are also higher. So those four factors combined, it's absolutely certain, in my opinion, that unless drastic action is taken now, which in my opinion, there isn't really any concrete evidence of doing that, then South Africa is going to default on their debt, and that's going to be catastrophic in the short run, right? It means IMF are going to come in, there's going to be a package, or we're going to try and restructure our debt unilaterally, even though the bond markets aren't going to really allow that. So very, very difficult situation, in my opinion. Because I mean, if you look at it currently, interest payments, just what government pays on interest every year as a proportion of their total spending, it's already at 16%. It's already the highest it's been in, since I can really remember. And with all of these factors, this could easily rise to about 25% in theory. And why I say in theory is that in practicality, the bond markets will not let interest payments rise to that level. We will have to default on our debt. Think about if you take out a home loan and you just keep on spending more than you earn in. It's going to result in that sort of thing. And I think one more thing that I must also add that I maybe forgot to add now is that we've been running a primary fiscal deficit for the last 10, 11 years consecutively. So every year for the past 11 years, the government has spent more than what we've been earning. So the sustainability of the fiscus has deteriorated significantly over the last 10 years or so. And now we have COVID-19 with all of these factors that I've just mentioned. So a little bit of a worrying situation. And you can see that debt service costs as a proportion of total revenue, is expected to breach. So these are from the Treasury's own figures. They're expected to breach, to be about 21%. My opinion is going to be much higher because I don't really see any real evidence of them cutting their spending. We hear about the zero-based budgeting, but nothing's really been, that's only going to be from next year, apparently. It might be too late then. So basically what the government needs to do is they need to do what they've been saying they're going to be doing over the last 2 years or so. So they've mapped it out. They've said the right things for the last 2 years. Now the time is to put that into action. I hope they do. So, I mean, so that's just sort of some of the key issues. There's obviously a lot of risks in the South African economy. That was sort of just one of the key things I wanted to chat about in terms of the economy, because it kind of ties into the construction industry. You can see that these are our forecasts for GDP. We're expecting a 6.8% contraction. After the second quarter figure now, it's probably going to be a little bit worse, to be honest. Some economists are forecasting about 10% contraction in the economy. And you can see that it's not really expected to get much better. A bit of a bounce back from a base effect in 2021, but definitely moving to a low growth path unless something is done in the short run. Okay, so the construction industry. Just for historical context, I just want to show you in context the latest figures that have come out. These are the gross fixed capital formation figures. It shows the investment in the construction industry. It's what we like to use as the sort of overall metric for the size of the industry. You can see that in the 2000s, the economy was booming. There was infrastructure spend. Then we had the financial crisis, a bit of a downturn. There was still a little bit of growth, 2012, 2013. You can see that since then it's been very much downward sloping. And just to contextualize it, this is the latest figure that came out in the second quarter now. You can see a really staggering drop in investments in construction in the second quarter. Again, this is annualized, so it is exaggerated a bit. If we look a bit, but I mean, this whole series is annualized, so we can compare. We can compare this drop with the rest of the series. But I mean, in terms of our forecast going forward, this is kind of what we're looking at. Is quite a bit of a drop here, and you can see that really moving onto a lower growth path unless something is seriously done. Yes, there is all this news about these big strategic infrastructure projects that have been gazetted, and infrastructure being a key part of the president's plans to stimulate the economy, etc. Even if they go ahead with those plans. And in my opinion, implementation is going to be an issue. There are going to be a lot of issues around that. It's still going to be down because private sector is extremely depressed as well, and is expected to move onto a lower growth path going forward. If we just look at some of the initial data on construction, tender activity, we saw absolute collapse in tender activity in April and May. You can see that we reached the lowest point, the lowest number of tenders that came out ever. I mean, obviously the government departments are closed, the private sector is closed. There's not going to be tenders coming up in April and May. There was really staggering number of tenders that didn't come out, the lowest in 20 years. So that's a little bit worrying going forward. And there was a bit of a bounce back, but you can see that it's very much been flat over the last 2 years or so in terms of tender activity. What is more positive, I mean, there are some positive, is that, for example, if we look at the data on the value of tenders awarded, it's actually a lot better than I would have expected, which is something quite positive. We're going to keep monitoring that. I'm not sure how sustainable it will be, but you can see that there's actually been a bit of an uptick over the last few months. Even in lockdown, there were still tenders being awarded according to our data, which, you know, we're still investigating somewhat. But overall, you can see that this mirrors the gross fixed capital formation data very nicely. You can see those growth here in the 2000s, bit cyclical year, recession in 2008. And you can see that basically since 2014 or so, nothing's really happened in that period. And then 2017, the wheels really just came off, where we saw big declines in award activity. But more positive is that over the last 6 months or so, the last 6 to 12 months or so, we have seen more tenders being awarded in terms of the value of those tenders, a lot more bigger projects coming out. So that is something a lot more positive. If the momentum can sort of be sustained in the value of these tenders coming out, then this will go a long way at boosting the overall outlook within the construction industry. More on the civil side of things, building, we still think is going to be very bad, but there is potentially some upside for the civil construction industry over the next couple of years. You know, if government can sort of get their house in order from a fiscal point of view. So as I mentioned, building versus civil, there are very different dynamics. You can see that overall, so these are our forecasts for this gross fixed capital formation for the size of the various construction industries. You can see that building, it's looking at almost a 30% contraction in the building sector, whereas construction works, which is civil construction, is only down by about 15%. And listen, it's always going to be, because of the fact that the construction industry was shut down for 5 weeks and has been at very low capacity for the next month or two after that, we're always going to be missing a whole chunk of construction activity within, you know, a 2 or 3 month period. So even if things go completely back to normal, or even better than before the pandemic, it still means that we're still going to have a big decline in construction activity, because simply we lost those months in the year. So even though this is down 15%, we are expecting the activity within the civil sector to basically bounce back to more or less where it was before, if not better actually, with all the extra spending and, you know, with better award activity, etc. Which means that potentially next year could be better, or the years after. But you see, I mean, the longer term outlook is a lot more negative because of these fiscal challenges that I've mentioned. Okay, then quickly, apologies, I see I'm running very much behind time here. I'm going to try just touch on the key things here. So it's a real pity the pandemic came at a really bad time for civil construction, because we were starting to see a stabilization within the, you know, broader civil construction market. Your roads and transport related infrastructure was looking a lot better, a lot more projects coming out from SANRA, for example, a lot more being awarded. Water as well was looking a lot better. Renewable energy as well, it's also definitely a positive going forward. So I mean, this is just from the SAFSEC survey, which I'll just summarize, is that contractors were a lot more upbeat about tender activity. There were a lot, and even in the second quarter year, you know, which was done after the pandemic, obviously, some of them said that award activity was satisfactory, which was very, very interesting in the second quarter of the year. You know, you can see up from very, very poor award activity sentiment in the previous quarters. So that's at least something positive as well. And also civil engineering confidence. You can see it was finally starting to bounce back in the first quarter of this year, apologies. So there was some stabilization happening. So this pandemic came at a really bad time for civil construction. Okay, so is there hope? Um, as I mentioned, investing in infrastructure is almost, it sounds like it's going to be the signature plan around, the government's whole stimulus package or their whole policy direction going forward. So that's something very, very positive. And there've definitely been steps in the right direction. We've seen the Sustainable Infrastructure Development Conference of South Africa, for example. We've seen new departments being created around specifically investing in infrastructure. The government understands that this is a smart thing to do to create jobs, to move our economy onto a higher growth path. Investing in infrastructure, it's no secret that it is one of the best things you can do in terms of stimulating economic growth, for the long term, for driving long-term economic growth, investing in roads, investing in water infrastructure, investing in power infrastructure, these sort of things. So the government does realize that, and they are saying the right things. But I mean, they have been saying the right things for the last 2 years or so, and implementation has obviously been a huge issue. So we have these 50 strategic infrastructure projects that have been gazetted at the end of July. Apparently, it's around 360 billion rands worth of projects that are shovel-ready, bankable, fast-track. We hear all these words. I'm not really quite sure what they mean. I think it's getting people a little bit overexcited, to be honest. And to be honest, just my personal opinion, I'm very skeptical about some of these projects. Yes, some of them will, I think, come through, and that's great. That will boost various segments. But we've gone through every single project, and almost every single one of them went out to tender 4 years ago, for example. Some of them have gone out to tender more than once. They've been in I think the fact that they are shovel ready is because they are already in the system at various government municipalities, which is why, I don't know, government might think that they're kind of ready to go because they're kind of already in the system. But how I look at it is that the fact that they haven't been awarded yet over the last 4 or 5 years, surely there must be a problem. There must be something wrong with, I know that project preparation has probably been done to a large degree, but there must be something wrong. That these projects haven't gone out to tender over the last 4 or 5 years. It's a long time. So I'm a little bit skeptical there. I mean, and also a lot of my criticism about these gazetted projects, that really lacks detail. All there really is the name of the project. That's it, really. Yeah, I mean, overall, I think implementation is going to be a huge issue. As I've mentioned, the government is really broke. I mean, that's an understatement. And going forward, we think it's going to get even worse. Again, and this whole stimulus program and the infrastructure fund, the private sector is expected to take the reins, really, at investing in infrastructure. The government is facilitating it, but the private sector is expected to be the one that's actually going to fund the projects, through these blended financing deals, through DBSA and other things. I'm just not sure if the private sector is really going to be keen to get involved in investing in the South African economy at this stage, given the economic fallout of the pandemic, given, we've had 2 years of the government saying the right things, but in terms of their credibility, I think it's not very good at the moment. So I personally don't understand how the private sector is really going to get incentivized to get involved in this, which puts this whole thing, on ice a bit. So also very little transparency in terms of these projects. Obviously, we have to mention corruption. If you look at public sector and private sector, but just a lot of just really lack of detail in a lot of the plans that they release. I'm just a little bit skeptical. I think some of it will come through, but I don't know if we should be getting overly excited, to be completely honest, in terms of these 50 gazetted projects. So you can see it's mostly, I mean, I'll go through them now. So then I thought I'd touch a bit on Limpopo and Mpumalanga then. So these are some of the strategic infrastructure projects. Limpopo could be a really big beneficiary of these programs, because you can see that, for example, in water projects, there are 3 big water projects in Limpopo. Phase 2 of the Makolo Crocodile River, Olifants River Water Resource Development Project, the Dam Grootetaba River Water Development Project, for example. Also 2 big road projects, a part of these sub-projects, N1 Musina Ring Road, N1 Polokwane, Eastern Ring Road Phase 2, for example. So Limpopo could be a bit of a beneficiary if these projects do start to get going. And just on the road side of things, I'm a little bit more confident, even though we have to question why these projects haven't been awarded yet over the last 4 or 5 years or so. In my opinion, there's something wrong. But I mean, road projects, I think SANRAL has a very good reputation, definitely the best state and entity in South Africa. So we're definitely more confident about the overall transport sector outlook. Mpumalanga only really benefiting from 2 social housing projects in terms of these gazetted, these fast-track 50 gazetted projects. See these 2 projects here below. And just to briefly touch on, so I mean, actually it's quite interesting. Mpumalanga and Limpopo are expected to be the 2 best performing provinces in terms of we've just released our provincial forecast reports, and Mpumalanga and Limpopo are expected to be the 2 best performing provinces. So that's also something positive for everyone listening. You can see Mpumalanga is actually, the size of the Mpumalanga construction industry is expected to overtake the Eastern Cape by 2020. Roughly 23 billion rand industry, whereas Limpopo is a bit smaller, it's about 11.8 billion rand industry. And the reason that Mpumalanga and Limpopo are expected to outperform some of the bigger provinces is that they are very much driven by the civil construction industry, your roads, transport-related infrastructure, and water, really. Those are the 2 big segments within Mpumalanga and Limpopo. Because our forecasts for building are so bad, for example, Gauteng has a huge building industry, majority building, Western Cape as well. So they expected, the construction sectors there are expected to contract really significantly because of that big building component, whereas in Mpumalanga and Limpopo, it's more civil driven, more public projects. So you can see in Mpumalanga, for example, 74% of all projects awarded over the last year were civil projects, only 26% building projects. And you can see very positive is that if you look at the value of tenders awarded, you can see it's been quite a nice uptick over the last year or so, although it come down a bit after now the pandemic and the lockdown. But that's also something positive, going forward from Mpumalanga. In terms of our specific forecast from Mpumalanga, you can see we're only expecting a contraction of 6.1%, which is, in this situation, is really fantastic. The model's given us this number, and Limpopo is actually the best performing province. You see only down by 3.7%. If this comes true, of course, very big confidence intervals. With the modeling now in COVID-19 road uncertainties. I mean, if you look at it overall, forecasting the overall construction industry to contract by about 20%. So compared to the 6.1% and the 3.7% contraction is actually really good. And as I mentioned, because we lost such a big chunk of activity throughout the year because of the lockdown, those sort of things, naturally you're going to have a negative number, unless we had overcapacity somehow after that, which is unlikely. Limpopo is even more driven by the civil sector. So over the last year, 88% of projects awarded were civil related. So also your transport, your roads, power as well. Only 12% building. So that's why civil is so much better than Limpopo's forecast is so much better. You can see the data is not as positive.
1 more minute, please, David.
Yeah, sure. Sorry about that.
I have to interrupt.
So I've said that I'm actually done. So that's, so if you're looking at Mpumalanga and Limpopo specifically, it's looking a lot better because of the civil industry. Building, which I only have 2 slides on, it's looking a lot worse. So broadly speaking, we are really seeing a collapse in private sector demand. We're expecting a 30% contraction in the built environment within the construction space. If we just think about demand for private sector housing and flats and those sort of things, and demand for shopping centers, office blocks, it's really absolutely collapsed. We look at the performance of some of the property funds, people aren't able to pay their rent, rental arrears are in the billions. So it's going to be a very, very difficult environment for the building industry going forward. Okay, great. Thank you very much. Thank you to everyone for listening. Look forward to some of your questions. Apologies for going over time.